I'm at REITWeek in New York, and joining me today is Andrew Parsons, Managing Director with Resolution Capital. Thanks for joining us today, Andrew.
Thanks, Carissa.
First, let me ask you, how have you seen the crisis in the Eurozone affect property investment in Europe?
It's been, I guess, a pretty slow burn for real estate companies. They've really been very slow to respond to the situation. I think they're trying to hope that it all goes away, and a lot of them have got some fairly, I think, deep issues that they're just not, in fact, addressing. So, you know, it's one that the market's waiting for some action. Generally speaking, we're seeing a little bit of select merger and acquisition activity at the response of some of the major shareholders. But generally speaking, management themselves have been very slow to react and respond in terms of trying to resolve some of the internal issues in their real estate companies.
What would you say is the biggest difference in how the Australian market has responded to the global crisis relative to other major markets?
Yeah, well, compared with Europe, it's quite interesting in terms of leverage was probably roughly the same going into the crisis in Australia versus Europe. The difference was that with the Australian REITs, they were unfortunately affected by some fairly onerous debt covenants, which and also financial instruments such as hedging, which forced them to raise equity at the wrong time. Nevertheless, they did raise their equity. They have resolved balance sheet issues. They've also addressed dividend payout ratios to make their dividends sustainable. So the Australian REITs are now on a very secure, solid footing, albeit investors did pay a price, but now that they've done, I think, made the hard decisions, they're right now to get on with life as a recalibrated vehicle.
Is there a relatively strong market in Australia for investors to watch?
I wouldn't say there's any one particular market that's doing particularly well at this point. Unfortunately, we've got a two-speed economy. The resources industry is doing very well. The rest of the country is effectively being strangled by the success of the resources industry. And so there's not many real estate plays that are focused on the resources part of the market. The rest of the real estate market, as I say, is really I guess struggling from the fact that interest rates in the country have been relatively high, and that's constrained investment in real estate in general.
Well, thank you so much for joining us, Andrew.
It was a pleasure.
I'm Carissa Chappelle for REIT.com.